Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi,
morning.
Good morning. Well, how are you feeling today?
Very good.
Always good, right?
Always good, always optimistic, but good cues, right, for the market as well. I mean, the big tech companies in the US did well.
Yeah.
Back home as well, good earnings from Tata Consumer, from Bajaj Auto. So I think the market is getting some more, ammunition to move forward.
You know, the fact is, Sonia, if it had not been for the tech earnings that you mentioned, we would have sort of started on a somber kind of note. But this lifts things, and I'll tell you why. So, last night, you had, for the first time in a very long time, that stocks fell at the open, but they did not do what they've done for weeks on end, which is, the dip gets bought. They did not bounce. The S&P 500 ended lower, sharply lower. The Nasdaq was down even more, almost a full 2%. The regional banks index was down 4%. So, the First Republic Bank, which had reported results recently, that fell almost 50% by close. It was a late fall, and that kind of had contagion impact on the other regional banks index. The measure is on your screen, a full 4% cut. So, so far, the story is pretty poor. Economic data also has been mixed. So, new home sales data is very strong. On the other hand, consumer confidence is almost at a 9-month low. It's always is the case that at the end of a cycle, and if you believe that we are at the end of a rate hiking campaign, when policymakers start to wait to assess the impact of what they've done, data gets very fuzzy. It's not one way. Data was one way, beating expectations when about a year ago, 6 months back, but it's not the case anymore. But it's always like that. It's to be expected and anticipated. It gets confusing, and that's where we are at. Now to the good part, right? After close, two giant IT companies reported numbers, Microsoft and Google, Alphabet. Both beat expectations in a very handsome way. Actually, if you look at what stocks are doing post-market in the US, Microsoft especially, we're seeing large gains. Actually, the guidance which came through from Microsoft was also very, very encouraging. So these are the two things which I think will lift the broader sentiment, especially in the tech space, when we come back into trade in the US later tonight. But we are trading now, and I think this should, at the margin, limit some of the damage had these numbers sort of missed expectations and not been as good as they are. So I think this is the silver lining this morning that we are beginning trade with. Now let's come to the market here. The Nifty yesterday had a flat close. The promise of another rally, a follow-through rally after Monday's big move, it was not really, it did not materialize really. The levels remain the same. On the Nifty, you continue to watch the recent high of 17,863, which is not very far away, about 100 points out. On the downside, the level that the market should hold on to is the 17,554 level. If this does not break, one could say that the uptrend remains intact. On the Bank Nifty, the levels are the same, 78.6% retracement of the entire fall. Again, the Bank Nifty had a pretty flat close. That stands at 42,965. That's the upside level to watch. On the downside, the recent swing low of 41,962 has to be protected if some selling pressure starts to come through. Watch the first hour or so, and if the impulse that you start to see, and you'll see it on the screen, is to try and buy the dip, I think go with that. The SGX is indicating an open which is neither here nor there, about 27 odd points lower, 17,759. Sonia.
Oh, absolutely. And I think the market will latch on to some of these cues that you mentioned, right?
Yeah.
So there are 2-3 of them which could aid the market sentiment today. Whether it takes the market out of its long-standing range of 17,600 to 17,800, that only time will tell. But there are more pluses than minuses as we kickstart trade. So as Prashant was pointing out, the US big tech companies posting very good set of numbers, better than street estimates. Not just Microsoft, but Alphabet as well. And Microsoft saw a big jump in revenues from its intelligent cloud business. So, that as well aided the sentiment over there. Even Alphabet, posted a profit in its cloud business for the first time ever. So that's a pocket that's doing pretty well. In our own markets, both Bajaj Auto and Tata Consumers delivered this time. Bajaj Auto's margins were at a 9-quarter high. For Tata Consumer, it was pretty much a beat on all parameters, a double-digit healthy revenue growth. EBITDA was up about 15%. And in that context, today is an important day of earnings. So a lot of numbers coming through. There's Maruti, there's Bajaj Finance, There's lots in the life insurance space. Both HDFC Life and SBI Life come out with numbers. KPIT Tech will be tracked very closely. It's been one of the strongest and most resilient stocks in the mid-cap IT space, so comes out with numbers. Getting back to the markets, yesterday FIs sold a bit. It was nothing alarming, about 400 crores, less than what they sold in the previous, on an average in the previous 5 trading sessions. And the Nifty, as I said, continues to be very range-bound, 17,600 to 17,800. The SGX Nifty is also hinting at a flat start. So let's see, there are positive cues that the markets can latch on to, but whether we move out of the trading range, maybe you just have to be a bit more patient.
Well, that's right. Sonia, but the very fact that the SGX Nifty is suggesting a bit of a pullback, I think that buy on dip thesis will hold. And in fact, if you hold on to that 17,650, you'll have to say that uptrend, the near-term uptrend, is pretty much intact. Now, overnight, we did have the Dow that ended lower, but as Sonia and Prashant mentioned, that you had a couple of positive earnings, both Microsoft as well as Alphabet. Both of them delivered good numbers, and that's where we should see some green. Now, just looking at the weightage, Microsoft is in the top 5 weightage, both on the Dow as well as on the Nasdaq, and Alphabet is in the top 5 on the Nasdaq itself. So the Nasdaq should clearly rebound today. The Indian markets, well, we came off the highs yesterday, but that was because of the expiry-related factor. So the Nifty Financial Services Index, if you look at the Nifty Financial Services Index, as well as the Nifty Bank, both of them moved down, particularly in the last 30 minutes or so. That was expiry-related. You want that to be undone today. So if that was expiry-related, you'll see a bit of a bounce back. That's the perfect chart that we're looking forward to. In terms of institutional flows, well, the previous session, we had a big buy number. That's DI and FI put it together, close to around 750 crores. Yesterday, that number came down a little bit. But the FIs, they continue covering shorts. They covered close to around 7,000 short contracts yesterday. The short positioning from more than 90% just a couple of weeks ago, it's come down to around 55%. So a lot of short covering is what we have seen. Moving to the index options data, well, 17,800 as well as 17,800 call and put, both of them were very, very active in trade yesterday. Both of them added 40 to around 50 lakh shares odd. But the key to note is where is the highest open interest? Given that we have expiry that's going to play us in the next 2 sessions, 17,700 put, more than 1.3 crore shares, in terms of open interest out there. So clearly the positioning is such that lower levels get defended, while at higher levels we're likely to see some supply. So let's pull up the levels then. Resistance will come at around 17,830. I say this because the 100 DMA comes in out there. On the downside, given that 17,700 put was fairly active, 17,675, that becomes an important support level. 17,650, 17,675. The 200 DMA is a little bit deeper at around 17,625 odd. Nifty Bank, it came off yesterday, but the crucial support is closer to around 42,500. That's just in the near term. And you'll want to see, that down move that we saw in the final 30 minutes getting undone. If that's the case, we should brace ourselves for a bit of a recovery and a bit of buy on dips. So the 30-40 point downtick actually is a bit of a blessing in disguise. If you get that, I think you need to look to buy into it, going by the data points, and hope that you see a bit of a rebound from there as well.
All right. 30 points lower on the SGX is what we have. Before we go any further, let's quickly tell you what is lined up here on the program in the first half hour of the show. We get you updates from markets across the globe. Dan Feynman is our guest on the show of Credit Suisse. He's joined us to discuss the global setup. Our research team will bring you the top list of stocks to watch out for, 10 in total as always. And at 8:30, we talk markets with Devin Choksi of KR Choksi Securities.
All right, well, let's kickstart the show now with some views coming in. One of the best minds in the business, Rhythm Desai of Morgan Stanley, first up on the show, saying that domestic ownership stake in India's top companies rose to an all-time high, while FPI stake fell to a 9-year low. He says institutions reduced exposure to financials, which continues to be Morgan Stanley's favorite sector as they expect acceleration in credit growth.
Money market views now. This is Kunal Sudani on the rupee. He's, of course, with Shin and Bank. He says global equity markets fell and bonds rose, boosting the yen and the dollar. U.S. consumer confidence dropped while Fed's manufacturing and services indices decelerated. He adds fears of banking sector fallout return as First Republic Bank refrains from giving guidance. Dollar index continues to find strong support at 100.85 level for the USD INR pair. Kunal says 81.85 to a dollar acts as a support, while 82.25 to a dollar is a resistance.
Right, and on the bonds, Neeraj Gambhir of Axis Bank says the Indian 10-year benchmark bond yield traded sharply lower, mainly driven by strong bidding in Friday's auction and follow-up buying the next day. SDL auction supply was lower than anticipated, and lower oil and US Treasury yields also aided the sentiment. Neeraj says going forward, the market will take cues from auction demand, SDL auction size, and the FOMC due next week. And he expects the 10-year benchmark to trade in a range of 7.05 to 7.20%.
Okay, so we have the equity calls, we have the money market calls as well. Let's tell you about the stock-specific action that we're tracking for you today. That's in our special Top 10 segment, running you through the list. Bajaj Auto, Tata Consumer, AU Small Finance Bank, IGL, Tata Steel Long, Mahindra CIE, and Gujarat State PSUs. All of them are on our radar on the back of positive news flow. On the flip side, Dalmia Bharat, Nippon Life, as well as Mahindra Life, they are stocks that could be reacting to negative news flow.
All right, Dan Feynman is co-head of equity strategy at Asia Pacific at Credit Suisse. He's joining us right now. Dan, good to have you with us here. Thanks very much for your time. Are you still maintaining your overall sort of cautious stance? We got a cut last night, Dan. Let's just start with the data. Home sales numbers were very strong. Consumer confidence was very weak at a 9-month low. How do you square both of those? And what should we expect? What will the Fed pick up on next week when they meet to make the decision?
Well, I think it's not unusual to see mixed data when you're at a transition point for the economy. We're not in full speed ahead mode. We're not in recession yet. We're shifting into a slower growth mode. And the first thing you would be seeing is mixed data signals. That's perfectly in keeping with our expectations that the economy in the U.S. will be slipping into recession this year.
Dan, hi, good morning. So, that seems to be the base case now, that the US is going to be slipping into a recession. But for most markets, including emerging markets like India, there's some semblance of sanity that has returned. After a steep fall last year, this year the market is sort of clawing back a tad bit. Do you think now valuations are ripe for investing into a market like India?
Well, India in particular remains on the expensive side. India has been very expensive, even by its own standards, for 2 years now. It's given up quite a bit of that valuation premium, but it's still an expensive market relative to its own history, relative to the rest of the region. The rest of Asia, however, I think is looking much more appealing. North Asia is clearly cheap. There are some markets in Southeast Asia that are cheap. In general, emerging markets globally, I think, are good value. This is in contrast to the U.S., which still doesn't look cheap to us.
All right. Hi, Dan. I think the last time we spoke as well, you mentioned that you prefer emerging markets in comparison to the U.S. markets, and I think you're holding on to that thought. But it appears because of valuations, India is not really up there as of now. Two-part question, though, I want to ask you about the global markets. One is, what kind of hikes are you working with? It appears 25 basis point is almost a done deal for May. But post that, are you seeing a pause, a pivot at some point of time, a cut later this year? And also the banking crisis in U.S., every now and then we're getting some bit of jitters. Is that a cause of worry, or do you think that'll be taken care of?
I'm having trouble with audio. If the producers could turn up the volume, that would be helpful. Let me answer your first question.
Let me try again.
Okay.
Yeah, Dan, let me try again. One point I wanted to understand was on the Fed rate hike trajectory and if there's a cut in store. And the second point is about the banking crisis. Every now and then we're hearing about a U.S. bank looking a little bit jittery. Go ahead.
Okay, I'm still having trouble with audio, but I think I catch the gist of your questions. First of all, on the rates issue, I think that we are more likely to see a pause rather than a full-on pivot where the Fed cuts rates. The Fed does have other tools at its disposal to deal with the banking situation, aside from cutting interest rates. The markets have consistently underestimated how hawkish the Fed would be. I think that trend will continue and that markets will be disappointed if they're expecting a pivot. As far as the banking crisis is concerned, as I say, I think the Fed has other tools at its disposal to deal with that. It won't have to use monetary policy. That is not going to be its favored tool. It can engineer a rescue handled by other big banks. It could wind it up as it did with Silicon Valley Bank and have the government take it over. But I think that its last option of choice would be to use monetary policy to prop up the banking system.
Dan, any specific views on India, emerging markets, what global funds are positioned like right now?
Well, funds have, I think, gone more towards a neutral position. Global funds have gone more towards a neutral position in India. You go back to 2021, they were heavily overweight. Then last year they sold down. This year, I think they're sitting at more of a neutral position. They like the underlying economic story, but not entirely comfortable with the valuations even now.
All right, Dan, we leave it at that. Thanks a lot for stopping by and speaking with CNBC-TV18. Appreciate your thoughts. So that's the word on the global market, but we have to take a short break because there's so many stocks to discuss locally. Bajaj Auto, Tata Consumer, Maruti comes out with numbers today. SKP IT Tech's earnings, lots to discuss. We'll come back in just a bit. Stay tuned.
That's the boss's cabin. The canteen is behind. Good morning, ma'am. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
कमाल की कार है ना, अभी ले लें क्या?
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, पर इंडियन ऑयल पे मिलता है। प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100।
वाह, इंडियन ऑयल की बात ही कुछ और है।
इंडियन ऑयल, पहले इंडियन, फिर ऑयल।
Cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
AC gone.
Blue Star on.
Blue Star fast cool inverter AC with voice command. Bye bye heat. Blue Star.
कैसे करते हैं ट्रेड? ट्राई 5 पैसा। ऑर्डर छोटा हो या बड़ा या कार्ट में पड़ा, कोई वैल्यू या सेगमेंट या कोई भी टाइप, ब्रोकरेज को लेकर अब नो मोह है। और सुन, 2 लाख के स्टॉक्स या 2000, इन्वेस्ट मर्जी से करो यार। ना लगे कैलकुलेटर, ना लगेगा पेन, अल्ट्रा ट्रेडर पैक से होगा ब्रोकरेज सिर्फ ₹10। कमीशन की टेंशन छोड़ो, 5 पैसा से रिश्ता जोड़ो। विद 5 पैसास अल्ट्रा ट्रेडर पैक, ब्रोकरेज होगी सिर्फ ₹10 फ्लैट। बीट दैट। ऐसे करते हैं ट्रेड। सोच मत छोटे, इंस्टॉल मार।
Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, as promised, we have plenty of stocks that we're tracking for you, and our research team joins us to run us through the entire list. Morning, guys. Sonia, you go first. Bajaj Auto, good set of numbers.
Good set of numbers, but you know what, Nigel? It's perhaps in the price as well, right? I mean, it's at a 52-week high.
Yes.
It's gained 20% this year. So just keep that going with that caveat. Good numbers, stable numbers in what was a really challenging environment. Above street estimates, it's a third quarter of margin improvement. The margins, in fact, went up 220 basis points on a year-on-year basis. Even the top line, despite a fall of 38% in export volumes, they managed to garner almost a 7% revenue growth. That's because domestic volumes have been pretty good. They took price hikes, etc. EBITDA went up 9.1% and margins have improved. Now, I do want to take you through what brokerages are saying, because a lot of brokerages have raised their earnings estimate and price targets on the stock. Jefferies says this was a very strong quarter in what is tough times. They retained buy, but they've raised their target price to 5,100 on the stock from 4,800 earlier. They've also raised FY24 and 25 EPS estimates. Motilal Oswal says it's a strong product mix that has driven an all-round beat. The EBITDA margin is at a 9-quarter high, and there are 3 catalysts now for Bajaj Auto to move up further. One is the Chetak electric vehicle ramp-up. 2 is a Triumph product launch that happens in June, and 3 is a recovery in exports, which the management said will happen from July onwards. Morgan Stanley has raised their target price from 4,486 to 5,063. They talk about a notable upside in the near term. Same triggers: industry recovery, Triumph launch, and also 4% dividend yield, which is keeping them bullish.
Okay, all right. So stock is at a 52-week high, but those numbers look good, so that stock should open up in the green. Mangalam joins us to tell us about Tata Consumer. Mangalam, well, that one as well has seen a little bit of a pre-result rally, but the numbers are good.
Well, you know, pre-positioning of stock prices before numbers is taking the joy out of a big surprise. On Monday, the stock was up 5% and we were all wondering why. Now we know the results are a beat on all parameters. The revenue at 3,600 crores, above our street expectations of 3528 crores. The EBITDA a little over 500 crores. We were working with a number sub 500 crores. And the margins as well as the net profit beating expectations. The India business grew at 15%. The street was working with a number of 12 to 13%. And the India food business grew 26%. That's largely in line. But at the same time, the Narishco business reported a revenue of 180 crores. The street was working with a number of 150 crores. And strong revenue coming in their international business as well. The biggest positive for me this time around is the sharp sequential recovery that we've seen in the international business, telling you that that is on a gradual path to recovery going forward as well, as the management has guided. And for all of us, Starbucks consumers would be happy to know that Starbucks has crossed 1,000 crores for the revenues in FY23. Good numbers. The stock has seen a rally. Let's see how it opens.
Well, with the kind of, the way they charge people on coffee, it's no surprise that they're crossing 1,000 crores. I mean, the coffee is now just a simple latte that you order, or a cold coffee, right? Now it's a minimum price of 350 to 400 rupees.
The Americano that you ordered the other day was for 300 odd rupees. But interesting, 11 years ago,
it's
Starbucks...
just water and one espresso shot.
That explains 1,000 crores and good gross margins as well, I guess. You don't buy the coffee, you buy the logo on the glass.
I think if anyone is from Starbucks is watching, they'd have this water and...
I hope my mother's not watching, because she's the one who, believes that you grossly overpaying Starbucks. I mean, just make coffee at home. But
yes.
I guess...
All right, well, that's coffee for you. We consume a lot of it all day. Starbucks not otherwise. But AU Small Finance Bank is the next company we're talking about. Abhishek has got more details on the numbers. Abhishek.
Well, Prashant, the net interest margin has compressed this time around, and as per management, it is expected to compress going ahead as well. So the net interest margin is on a declining trend from current quarter, or let's say about Q4 FY23. So for the quarter, the net interest margin was at 6.1% when compared to 6.3% in the same quarter last year, and about 6.2% in the previous quarter. The operating profit growth is at a mere 2.74% on a sequential basis, despite the fact that they have had robust loan growth. Last quarter, the operating profit growth was nearly about 11.5% quarter on quarter. So there is some compression seen in the operating profit growth as well. Cost to income ratio, that spiked to 63.1% when compared to 61.6%. They are having other expenses issue in the OPEX this time around, which has increased the cost to income ratio as well. Lower tax rate has aided in profitability. The tax rate is below 20% from the earlier level of a little under 25%. Asset quality remains good. It has improved. Gross NPA ratio is at 1.66% when compared to 1.81% in the previous quarter. The restructured book has also declined to about nearly 1.2% when compared to 1.66% in the previous quarter. So in terms of P&L, both NII and PAT is a beat on our poll. Back to you.
Thanks a lot for that, Abhishek. Well, we were talking about good numbers coming from Bajaj as well as from Tata Consumer, and the street sensed it. Well, the street has been sensing, or there was a whisper number that maybe, in fact, Dalmia Bharat's numbers will be a little bit disappointing. So, and that is the case on the margin front. On the top line, there's a beat because they sold more. Volumes are a little bit better than the average that we put out. The EBITDA number, though, that's a bit of a beat. It's a 10% beat, 10% miss, actually, in comparison to what we were working with. The margins as well did come in a little bit lower, but first look at it, everyone thought the profit number is much better. But that's a one-time income that they've got because they've sold their non-core assets. The reason the margins have missed is because the raw material costs, you take the cost of raw material inventory and put it together. Well, that's at around 750 crores. In the past quarters, it was around 450 crores odd. So this higher raw material cost is what's dented the EBITDA per ton as well as the EBITDA margins. Now, it's not the street wasn't prepared, because in the last 1 week or so, the stock is down 5-6% or thereabouts if you pull up a last 1 week chart. And what will support the stock is higher raw material build-up will support them in the coming quarters. Valuations, they're attractive. It trades at a bit of a discount in comparison to the larger names, and good visibility on capacity addition. So they're talking about ending this year at around 46 million tons from around 41 million tons. So it opens up in the red, but I think from lower levels, you'll see a bit of a bounce coming in on that one.
Okay, we'll keep an eye out on that one. Let's go across to Sonal now. She's tracking the PNGRB order on gas and what the implications of this on stocks as well. Sonal, good morning.
Well, it's largely for IGL, Sonia. PNGRB has resolved on long outstanding authorization issues for IGL. This is with respect to 3 geographical areas, Faridabad, Greater Noida and Gurugram as well. Now, ICICI Securities says that it resolves long outstanding issues, so of course it's a positive. But in terms of what the order really says, now IGL supplies 0.5 MMSCMD of gas to these 3 areas at a nominal margin of ₹2 per SCM. For other areas, it's around 7.5 rupees per SCM. So they were earning really low numbers as far as these 3 geographical areas are concerned. Now, there have been orders for specific areas as well from the PNGRB. Greater Noida authorization has been completely given to IGL. This can add 30 crore of EBITDA for the company in current volumes, around 100 crore by FY24. Faridabad has been divided into 2 parts. One part has been given to IGL, from which it can benefit from additional EBITDA of around 25 to 30 crore rupees. When it comes to Gurugram, only 30 to 40% of the area has been granted to IGL, and this has come in as a disappointment because this is where they were expecting the next leg of growth, because it's a larger area in terms of volumes as well. So volumes would be around 0.7 to 0.8 MMSCMD. This is by FY26. This could add 220 crore of additional EBITDA, but they had expected 2.5 MMSCMD of volumes from Gurugram, so the EBITDA is lower, but yes, it has come in as a relief for IGL.
Okay, all right, Sonal, thanks very much for that. Well, more earnings in focus. Surabhi's got that list. She's joining us right now. Surabhi.
Thanks so much for that. So I'm watching out for quite a few earnings today. The first one is Nippon Life AMC. On a sequential basis, the revenue is down nearly 2%. The operating profit is down 2.4%. And the pressure on the yields continue. The revenue yield is down by 1.4% at 47.7 basis points. Next is Tata Steel Long Products. The company continues to make losses, but there is some improvement on a sequential basis, which is a positive. The revenue is up 43% on a quarter-on-quarter basis. They've reported an EBITDA loss of 41 crores versus 372 crores, and a net loss is contracted by nearly 260 crores, which is now at 524 crores. Mahindra CIE, a good set of numbers there. For Q1 of calendar year 2023, their revenue is up 18%, the EBITDA is up 36%, and margins are higher by nearly 200 basis points, came in at 15.6%. And lastly, Mahindra Life Spaces, the sales have dipped sequentially. The sales value is 361 crores versus 450 in the previous quarter. Their volume is at 0.49 million square feet versus 0.61 million square feet in the previous quarter. And the collections were flat on a sequential basis at 304 crores.
Okay, thanks a lot for that. Well, back to Sonal now. She's tracking the Gujarat State PSU. Sonal, why is that?
Well, that is because the Gujarat government, they have come out with a new policy for minimum levels of dividend distribution by these companies, and also for bonus shares that these companies would issue. They have set some criteria. Now for minimum level of dividend, it should be minimum of 30% profits or 5% of net worth, whichever is higher, and only minimum and maximum permissible limits should be given up by these government PSUs. In terms of buyback, they say PSUs with net worth of at least 2,000 crore rupees and cash and bank balance of 1,000 crore rupees should go ahead and do a buyback for their shareholders. In terms of bonus shares, they are looking at defined reserve and surplus equal to or more than 10 times of the paid up equity share capital of the company. In that case, they should go ahead and do a bonus share issue. Share split should be done if market price or book value exceeds 50 times of its value. So they have set out certain ways in which they can reward the shareholders. The 7 listed companies, all of them are profitable, which are owned by the Gujarat government. The likes of GNFC, GSPL, Gujarat Gas, GSFC, the other names will be for you on the screen. All of them will be in focus today on the back of this news.
Okay, thanks a lot for that. So we'll keep all of these stocks on our radar. Here's a quick recap in case you missed out on any stocks with positive news flow. There's Bajaj Auto, Tata Consumer, AU Small Finance Bank, IGL, Tata Steel Long, Mahindra CIE and Gujarat State PSUs, while stocks with negative news flow, Dalmia Bharat, Nippon Life AMC and Mahindra Life Spaces. Let's do one thing. Let's also get a handle on what's happening in the world of commodities. We have Manisha Gupta joining us for all the action that has taken place overnight. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, I'm looking at the crude oil prices, which have declined 2% overnight yet again, and gasoline is trading at a 4-week lows. There are tightening financial conditions that could hurt demand, and then shrinking oil refining profits in Asia also seem to be weighing on. The U.S. weekly inventories fell by 6 million barrels as per the latest view coming in, and that also tells you that the demand is not so strong. The only thing that is keeping the prices where they are is the expectation of the China fuel demand that could come in because of driving around the Golden Week holiday. That is what the markets are holding on to. But the metals haven't fared any better because the China construction starts fell 20% in the first quarter of 2023. So you have the iron ore prices down to the lowest since the month of December. Copper is trading at a 1-month lows now on muted demand for physical deliveries. Zinc is trading at a 2-year lows. Aluminum price is trading at a 2-week lows as well. So there's barely any green across industrial commodities.
All right, Manisha, thanks very much for that. We'll take a quick commercial break here. Deven Choksi of KR Choksi will join in to touch upon, various stocks which should be in focus on the back of earnings that our research team highlighted. Later, we will connect with ML Mittal of Bharat Wire Ropes to discuss their fourth quarter earnings, which came out recently. Stay tuned.
%100% happiness with SBI Home Loans. 0 processing fee at 8.50% onwards. Apply today. Call 1800112018. Visit homeloans.sbi.
चले मामा जी घर चले
चले चले चले सांस भी नहीं लेने दी यार।
साफ हवा एंजॉय करने के लिए अब कहीं और क्यों चले, घर पे ही रुके। वोल्टास का नया प्योर एयर एडजस्टेबल एसी विद HEPA फिल्टर, ये जर्म्स और पोल्यूटेंट्स को फिल्टर करे और दे साफ ठंडी हवा 6 एडजस्टेबल टनेज मोड्स में।
तो हवा और सेविंग्स दोनों टन-टनाटन।
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे Z। प्रोडक्शन भरपूर बढ़ेगा, प्रॉफिट भी अब खूब चढ़ेगा, काम को नई दिशा दिखाकर अपनाएंगे Z। चलो देश का रूप निखारें, पर्यावरण को हम ही संवारें, प्रदूषण से बचाने को अपनाएंगे।
Register with Ministry of MSME's Z certification scheme today and help India become a global manufacturing hub.
We protect you anywhere, everywhere. Family Health Optima Insurance Plan. Star Health Insurance. Always at your doorstep.
All right, hope you're having a good morning so far. The bulls definitely are, because there's lots to latch on to in terms of positive cues. Will the buy on dips continue? Time will tell. But for now, the SGX Nifty is really quiet. Deven Choksi of KR Choksi Securities is joining in. Deven, hi, good morning. Thanks for joining us this morning. It's been interesting. Good numbers coming in from a lot of Nifty heavyweights. So Bajaj Auto, for example, strong earnings in what has been a challenging environment. But the stock is up 20% this year. Do you think there's more upside left?
Yeah, good morning, Sonia. Well, I think on the domestic front, the product mix has possibly contributed to these higher numbers in this particular quarter, as well as, I think, the second half of the financial year. Largely because of the three-wheeler, which continues to remain mainstay as far as, I think, the profits and profit margins are concerned, has contributed significantly well in the product mix, and that's possibly one of the reasons for which it has shown better performance on margin front as well. In fact, it is very happy to see that Bajaj Auto is returning back to its earlier days of close to 20% kind of EBITDA margin in this particular quarter numbers. Should it sustain, definitely there is a case for company to probably remain at a higher level than what it used to remain in the previous years. The export front, as I see it, I think remains still challenging. Not, I think, enough amount of clarity coming out as far as the export is concerned, and so would be the fluctuations on the forex. I would like to believe that I think the fluctuations on forex front probably has stabilized, and whatever advantage they have gained so far could possibly continue in time to come. But that's going to be one challenge, I think, that one will have to look out for. Overall, I think the price, according to me, I think has moved up in the last 2-3 months' time. And probably, I think it covers up most of the possible gains that the stock would otherwise give from such kind of results.
All right. Hi, Deven. Good morning. So you believe that most of the good news is possibly in the price. You know, my co-anchors and Mangalam as well were discussing about coffee. I don't know whether you're a coffee person, but Tata Consumer's numbers looked very, very good. The stock, though, has run up even there. What's your view on the stock from here on?
Yeah, Nigel, good morning. Well, on the beverage front and the food products front, both of them have registered significantly better performance. On the beverages front, particularly, I think with the stores getting higher amount of footfall, comparative figures definitely, I think, are reflecting relatively better performance in this particular period. But more importantly, the growth has been registered on the food side, and that is where probably I think one is looking at higher amount of possibility of continued growth and the margins thereafter. On the volume front as well as on the revenue front, the food product segment has contributed 8% on the volume front and 25% on the revenue front growth which has come up, which probably I think is a good sign as far as I think the company's outlook is concerned. In my viewpoint, I think still there is a lot to come as far as Tata Consumer is concerned. Not many strategies have been placed in this company's growth program. And I would like to see how this company, I think, registering further numbers on a sustainable basis. But overall, good set of numbers. A stock is worth looking at investment even at current levels.
Devin, good morning. You know, one name from yesterday was Crompton Consumer, which was down 12%. After all of the management changes, etc. There was a conference call yesterday evening with analysts. I don't think that has added very much to the confidence. They've basically just said that, you know, this is not new. They were looking for a new MD CEO for some time, and that the new person who's coming on is basically he fits the bill, according to the management. And I don't know how much that will do for the stock, but what's your sense? Crompton Consumer still trades at about 27, 28 times F524 earnings.
Hi, Prashant. Good morning. Well, I think the valuation-wise, it is adequately priced. Generally, one has seen that whenever the management changes, I think the first task that they would undertake would be to clean up the previous mistakes, or for that matter, even the balance sheet cleanup, I think, would take place if at all there are any issues which are pending. If that is the case, then possibly, I think in subsequent quarters, you might see, I think, some kind of a, check coming on to this particular front of cleaning of the balance sheet and the numbers. We have not heard anything on that front, of course, I think, from the company at this point of time. But one would like to give them a chance. Maybe I think the new management would probably start producing better strategy going forward. So let's wait and see. As of now, the stock appears to be fully priced, and I think not much is, I think, probably talked about for immediate future gain as far as I think the valuation is concerned.
All right, Devin, we'll come back to you in just a few minutes. You know, for the timing, let's focus on a smaller company, Bharat Wire Ropes. They posted a solid set of numbers in Q4 earnings. The sales bounced up. The margins came in at multi-year highs. In fact, came in at close to around 28%. Mr. Mittal, ML Mittal, Managing Director at the company, joins us on the show. Hi, Mr. Mittal. Thanks so much for joining in. Well, we haven't spoken before, but these numbers looked quite good. So we want some crisp details. For the last year, your volumes were close to around 38,500 tons. So what is the outlook in terms of volume growth for this year? What do you end FY24 with? Point number one. And point number two, Mr. Mittal, your margins are looking spectacular, 28%. What is the sustainable margin we should be looking at from here on?
Good morning. See, the volume growth is mainly three factors. One is product mix. Second is volume growth. Third is realizations. So as compared to last year's, our realization increased almost by 30%. Volume growth increased by 13%. And product mix also we changed. We are going for the better product mix. That's why we are getting higher realizations. And I'm confident that this growth is sustainable in the coming years also.
Mr. Mittal, just to get back to the point, volumes, you're expecting it to grow by at least 13% for this year or more? From 38,000, does it go to around 43, 44,000 for this year?
It's likely to be there, but depend upon the total productions. This is first month of operations, and we are confident. Yes, we are going to increase the production because some bottleneck in the plant capacity. We are going to add some balancing equipments that will give additional volumes also.
You have got enough capacity. What is the growth part? Should we assume 42,000 for this year?
It is likely to be, better as compared to last year's.
Okay.
Look into the expansion plans, means a bottleneck in the systems and additional equipment we are putting to just capture the total capacity.
So we are working with around mid-teens growth for this year. 13% is what you did last year. You're looking to replicate that. So we'll work with that for now. What about margins? I asked you that as well. 28% margins is what you did. We got you're focusing on value-added products. So give us two numbers. Sustainable margins. Second is, since you mentioned VAP, how much does value-added products contribute as a percentage of your sales?
See, almost 25% production is a value-added products we are having right now, and which is going to increase up to 40%. So this margin is going to, better as compared to earlier years. That's why we are confident this year's company can sustain the top line as well bottom lines, and we are expecting the much better margin in coming years.
So margins of what, 28%? You can hold on to these levels?
Yes, definitely we can hold this margin. Look into our track record and existing order book positions and the margins, what we are expecting. Second thing, the steel prices also going down as compared to earlier years. So that also adding the margins. Operational efficiency improving in the current years. We are having many other options like energy cost in the controls. We are going for solar. Okay. Solar will give, and LNG price is also going down. We signed the 6 years. That will give the more benefit.
Or we'll have to track that because 28% appears a very high number, but you're confident about maintaining that because of the measures, so we'll hold on to that. Final couple of questions then. In the past quarter, you've increased the promoter holding has gone up by around 3.5%. It's closer to around 40%. Does the promoter intend to hike stake from here as well? If yes, to what levels? And though you're hiking stake, but 45% of your shares are pledged. Why is that?
See, 5% we taken preferential allotment at 125 rupees. Our shares are placed to the existing bankers as part of restructuring schemes. It is not placed to any third person against the loan or anything. So we not take any financial assistance from any third parties. This is a existing bankers has placed that will release once we pay the term loans.
Okay. And promoter, will it increase stake from here on from 40%?
Not likely immediately.
Okay. All right. Final question then. Last year you did revenues of 590 crores. What do you end this year with? Should we assume around 650 crores for the year, revenues?
Revenue is likely to increase in current year also. Because as I mentioned, we are going better, certain equipment we are adding, and definitely bottleneck in the systems, whatever production, we are getting current year, definitely will get better than in the coming years.
To what level, sir? From 590 crores, what can you do?
See, it's difficult to reply right now because of the, entire year is pending, but we are confident because we are adding the additional equipments regularly. So wherever there's a bottleneck in the systems or, utilization of capacity, we are going to achieve the higher capacity in current year also.
Got it. All right. Thank you so much for joining in. That's Bharat Wire Ropes. By the way, it's had a stellar run. It's up almost 100%, I think doubled in the last 12 months. And the promoter holding has also risen to almost 40%. So keep an eye out on that stock, one of the big buzzers in the broader markets. But let's get back to tracking some of the large cues. So many cues to look at today. Deven Choksi is still with us. Deven, the other stock that we're watching is Maruti. Comes out with numbers, later in the afternoon. And this time around, there are so many positive triggers for Maruti. Of course, demand has picked up. Supply chain constraints have eased. At this price, how does the risk-reward look?
I think on the face of it, the price probably, I think, has corrected. But at the same time, I think one wants to see the sustainability of the profit numbers. I'm not completely sure about, I think, how exactly the revenue growth definitely understood because of, I think, the volume increasing. But on the profit margin front, I think I am having my own doubts. I think I would like to see a couple of quarters of sustainable profit margins coming in for the company. And possibly, I think the year 23-24 looks relatively more promising than it was before because most of the issues which were troubling the company have been sorted out by and large. And I think the demand scenario remains practically, I think, good for most of the companies, including for Maruti. With the new product launches, I think on that front, we are remaining relatively more strong, more convinced. I would like to see, as I said, I think how the profit margin sustains in subsequent quarters.
Okay, so that's on Maruti. Anything in the technology space, Deven, that you like? Because, you know, we've had some good numbers come in, right, in the mid-cap IT space. There's Persistent Systems, there was Mastech, Cyient, all good numbers. And today you have KPIT Tech that comes out of the earnings as well. So from that entire pocket, anything that stands out for you as a good buy now?
So generally, the observation, Sonia, is that I think in the frontline IT companies, most of the stocks have been priced to perfection levels, as a result of which I think any level of disappointment has possibly affected them more than otherwise. Though I would like to believe that I think many of the IT companies would have relatively sustained growth continued forward, largely because of the fact that the world is changing and probably I think there is a higher amount of demand for the solutions that Indian companies are offering particularly. In the mid-tier IT space companies, I think companies which are offering the solutions on the technology front and the industrial product segment, probably I think they are relatively better off because they are having that niche in this particular area where probably the sustainability of the business is seen much higher. At the same time, I think some of the specialized applications, particularly I think where the changes are coming very rapidly, and that is going to be the automobile segment, where the autonomous car, particularly electric vehicles along with, I would think there is going to be, I think, higher amount of demand for the niche players like KPIT or for that matter Tata Elxsi in this particular space, including companies like LTTS, I mean, where we see higher amount of growth coming from the industrial segment, would possibly mean that I think these companies should relatively produce better performance. So we would be selective about looking at IT companies, and particularly in the mid-tier segment, where I think the opportunity looks more reassuring than otherwise.
Okay, all right, Deven, thanks a lot for that. But, you know, we request you to stay with us for a little bit. We'll slip into a short break. We come back, we continue our chat with Deven. We'll also tell you what's lined up for the next half hour on the show today. Coming up, we'll have Anuj Singhal, who'll be joining us for a complete trade setup. Post that, we'll get you the top stock picks for the day from our technical as well as F&O experts. And before market opens in CNBC-TV18's Stock Board, we'll highlight all the top stocks to focus on, which will be reacting to news. Stay with us.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
Cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
Zedlak Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1026 rupees to 1080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
Welcome back. We have about 15 minutes to go before the pre-opening rates kick in. Anuj is joining in now to tell us what to expect. Anuj, you know, we have plenty of positive cues, right? I mean, this morning as well, good quality Nifty earnings, but none of that is taking the market out of its range. So that's getting a bit frustrating. You think the time has come?
Well, Sonia, Nigel, good morning. I think maybe, you know, you're quite younger to me, so a bit more impatient. I think it's okay. The market had a big breakout on Monday. It had just 1 day of consolidation. It's fine. Look, the trajectory for the market is up. And We have been ignoring global cues. I think that's very interesting, though global cues are now getting slightly tricky, especially from the US on that banking issue. So that's something which I'll keep one eye on. But most numbers, this earnings season for me has really been, the big highlight has been X of IT. And even in IT, except Infosys, everything has been looking quite strong, especially the domestic facing numbers. This morning, for example, Tata Consumer and Bajaj Auto, phenomenal numbers. You could argue that stocks may have already priced it in, but it's looking quite good. Now, today is the penultimate day of April series, so normally you see a big move. My sense is you need to see yesterday's high. If you start to cross that, then there could be fireworks. On the downside, the 200-day moving average is something we have been defending almost on a daily basis. Monday's session put a bit of a cushion above that. So 17,625 becomes your big support. As I said, on the Nifty, today's trade is about breaking yesterday's range. The high was 17,807, the low was 17,716. So we need to see how Reliance and TCS move in trade today, because both of them have been showing some good traction of late and negating the negative impact of Infosys. As I said, X of Infosys, most index heavies are close to breakouts. If you see the charts of HDFC Twins, Larsen & Toubro, ITC, ICICI Bank, have phenomenal, beautiful charts, most of them. The Bank Nifty is quite strong. That has been in a positional bull market. As you can see, some of the stocks till 42,250 is held, and another 2,000-point rally, which could take Bank Nifty to all-time high in May. That's been my stated position for last 2 weeks or so, and I'm still holding that because there's inherent strength in the banking stocks. So let's see, after one day of consolidation, maybe another day of consolidation won't hurt, but the overall trajectory of the market is still on the higher side rather than the lower side. As I said, I'll just put one caveat. Keep an eye on the US market. It should not capitulate. As long as it's fine, it's falling just 1-2%, we're okay.
All right, Anuj, thanks a lot for that. So as Anuj mentioned, the trend is up. And maybe yesterday as well, we took a bit of a break because of the weekly expiry as well. And that's why, financials and banking stocks did come a little bit lower. But let's move on then. We have Mitesh Thakkar and Sudarshan Sukhani as well who join us. Good morning, gentlemen. Thanks so much for joining in. Mitesh, you tell us, what's your view on the index, on the Nifty as well as the Nifty Bank? What are the levels you're tracking?
Morning. We have been advocating some kind of long positions, and yesterday I mentioned that around 17,820, which was the hourly high. The last time the markets hit those levels, some profit booking can happen, and advise people to take 1/3 position off the table. But I think the idea is that the directional bias, as Anuj was also highlighting, remains on the upside. So closer to 17,650, 640 is my support area. Buy on any dips, 33, 34 points is what SGX is indicating. Get another 20 points, I think, buy there comfortably, and I'm talking about spot levels. So around 17,700 would be a good entry point. Keep a 60-point stop loss, and I think we should re-attempt 17,820 and possibly this time get past it. So overall, this is a market which is trending on the upside. Use declines to buy into it, and as long as 17,550, which is the bigger support area, that doesn't break, I think I would be more of a buyer.
Okay, Sudarshan Sukhani is also with us. Sudarshan, the trend is on the upside and it's very visible. But I want to understand from you, what could be the leaders of this rally? Will it continue to be banks? Do you think IT could come back in a big way? And what about other smaller pockets? There's consumption, there's autos.
I would say that IT would come back. We have already seen the results in the US markets have been cheerful after hours. And banks have already done their bit. So if people are looking for a positional trade, IT is probably a much better idea. And it's also at its lows. So we are buying at a much lower level. Shall I also talk about the Nifty?
Absolutely.
Yes, please. All right. And see, you're right. The trend is up. Now, I also explained that apart from the uptrend, this is going to be a choppy uptrend. So we must be prepared for these repeated declines, but the declines are buying opportunities. And the levels are the same, which Mitesh has said, 17,550. So far as that holds, every dip is a buy, and there will be many dips.
Okay, fair enough. The uptrend is there, and it's been there. A bit of a pause sometimes, a bit of a pullback, but slow and steady. In terms of specific trades, gentlemen, good morning. Mitesh, what do you have?
Good morning, Prashant. I have 3 buys to a sell. Sorry, excuse me. Yeah. On the buying side, my first stock is Britannia. I think good price and volume breakout yesterday. So on a mild dip, let's say around 15-20 points, 43.80, 85 could be a good entry point for the stock. Keep a stop below 43.40, 4,500 or thereabouts is the target area. A buy on Havells with a stop below 11.99 for targets of 12.50. And I would also want to suggest a buy on Reliance It's been making that high of 23.81 for the last 2 days. So by about 23.85, keep a stop at 23.70, and 24.20 should be the first target area. And one sell call, that's in Gujarat Gas. Keep a stop at 465, look for targets of 444.
And Sudarshan, what about you?
Well, Bajaj Finserv is a buying opportunity. The stock had rallied, consolidated, and now a breakout is imminent. And we use dips like today to go long in good quality stocks. Because of some snag in my software, I don't have the stop loss levels today. But Granules is an intraday short. That stock has been weakening. It's distributing apparently, and some lower levels are likely to come in. So is the case with ICICI Prudential. There was that big disappointment. The stock is probably going into a correction. That's also an intraday short. And a buying opportunity comes in Tata Power. The stock had consolidated for a long period of time. Again, I'm saying good quality stocks need to be bought when they are consolidating or when they're going through minor dips.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you all for the 9-10 call as well later on in this show. But let's go back to Deven Choksi, who's waiting by. Deven, thanks so much for holding on. Tell us, what about the cement pack? There are various tailwinds because we're getting into an election year, so volumes will improve. Input costs, as we know, have cooled off. Petcoke, coal prices as well have cooled off. But pricing is an issue. What's your view on the stocks? We had Dalmia Bharat, who came out with a set of numbers. They are bulked up on the raw material, so that's why there was a margin miss. But your view on the space?
Overall, Nigel, I think we believe that cement as a commodity probably will have relatively better times, not only for 1 year, but for many years to come, as I see. Largely because of the fact that infrastructure spending in the country is continuing and probably growing at quite a rapid pace. Cement is going to be under demand. So demand side of situation is not questioned, either from the government side of spending or even from the spending, I think, by the industry and also by the real estate. So from that perspective, I think the cement demand continues to remain very, very strong. Fortunately, I think the raw material prices, the fuel prices have come down, and as a result of which, we are seeing relatively better stability on the margin front as well from most of the companies. However, it will continue to remain, I think, a little bit more challenging for some of the smaller players, as I see, compared to the larger players who are having bigger presence. The larger players have relatively better ability to meet the logistic-related challenges, the cost therein. And that's where probably I think some of the companies will be differentiators. As I see it, I think some of the names like Ultratech, even for that matter, ACC, Ambuja, and I think Shree Cement kind of companies would remain relatively, I think, stronger bet because of their ability to produce larger volumes. That is where probably I think one could possibly go with as far as I think the investment or the position is concerned in the cement segment. But we remain relatively confident about the prospects going forward for cement companies.
Okay. The other set of numbers, we of course didn't talk in great detail about it, but looked really good, Deven, was Mahindra CIE. And that stock has had a dream run. I mean, it's been one of the strongest stocks in its segment. A revenue growth of almost 20%. The EBITDA margins have improved 200 basis points in what has been a, challenging year. At this price, 360 rupees, is the risk reward favorable? I mean, it's already seen an 80% rise in the last 12 months.
Yeah, maybe I think one of the reasons for which this company has had their past, if one looks into, one would find that I think whenever the raw material prices have adversely affected them, I think they have slipped as far as I think the numbers are concerned. I think that situation is behind them.
Yeah.
And on the other side, the OEM customers particularly are having relatively better outlook for the business. As a result of which, many of the ancillaries are likely to show relatively better performance, including Mahindra CIE. I'm not too sure about, I think, the price argument at this point of time. Probably, as you rightly observed, I think the stock has already appreciated, and many of the good news may be in price at this point of time. If it sustains about 15%, probably, I think, going forward, one could look at this company once again from investment if the price gets corrected.
Devin, just a 30-second sort of response, if you will, on names like RITES, RVNL, IRFC, Texmaco Rail, anything between 10 and 20% gains yesterday. I mean, second day, very strong gains.
Prashant, I feel that I think since the market stabilized, I think some of these names have once again started coming back onto the surface. I don't think that the fundamental arguments have changed beyond the point. they continue to remain in a situation where the demand outlook is good and the profit margins would remain a little bit more challenging. So that is where I would probably remain a little bit more watchful about as far as buying into them into the portfolio. I find relatively better opportunities elsewhere.
Okay, relatively better opportunities elsewhere, and we'll not go into these names at this point in time. But I mean, momentum begets momentum. I mean, as we all know, and there is momentum in this particular space. And otherwise, at least yesterday's a dull kind of market. We'll take a quick break here. We are going to come back. The pre-open session will be with us. Mitul Shah of Reliance Securities will join in to put the focus on the auto sector. Bajaj Auto reported a strong fourth quarter performance. The street, though, is a little divided on the numbers. We also, of course, are awaiting Maruti's earnings later today. So both those stocks in focus with Mitul in just a bit.